Jamie, good to be back. So why do Americans open Swiss bank accounts?
This is a question I get so often from my Swiss peers. There's a variety of reasons. And I think right now, what we have seen a huge peak in interest this year, 2025. And that's one thing that we see every 4 years. If there's a political change in the US, if there's a new administration coming in, a lot of people are interested in moving some assets overseas. So that's already one reason, political uncertainty, and they just want to have a safe nest egg outside of their own country. Obviously, it is reported, it is taxed, but it will just be less affected by domestic political developments. And what we have also seen right now with the current administration is a topic that becomes more current again is the devaluation of the US dollar. So the US dollar has been losing value almost since its inception, over a century at least. And that's something that we also see now accelerating because the current US administration has made it very clear that they have no interest in a strong US dollar and that they still believe that the US dollar is currently overvalued and that they are thinking about and talking about measures to take to artificially lower the value of the US dollar even further. So if you have all of your assets in the US, be it in real estate, stock market, companies, cash, whatever it may be, you are very exposed to this currency devaluation. So that's another big topic that comes up very regularly. The fiscal responsibility, the money printing, and just the very high levels of debt that the US has, that people are worried about the direction the currency is going to take, and they just want to diversify out of that into some foreign currencies.
Absolutely. I think it's interesting because where you get that question from your Swiss friends, whenever I'm back in the States and I'm around my friends, I get the same question. Why do Americans open up offshore bank accounts? And when I get into the details of what opportunities exist, it's amazing to see how much more open their eyes get physically as I'm talking about it, because it's something that is so often not seen in the American culture. We see, or in America, on the continent of North America, in the country, because we don't see it. We see the US dollar. That's all we know. We can travel to every part or find every geographical kind of scenery in the United States, all with the US dollar. And when you explain to them that, yes, against some currencies, US dollar is a stable, safer currency, but not against many currencies that exist. And the system in the US doesn't allow so much access to those currencies and those foreign markets to actually get that diversification. And so I think the other side is Americans have the ability to become wealthy in their lifetime, from zero to very wealthy. And that's also an issue, is when you create a wealth, you want to make sure that you can sustain it, move it to the next generation. And that's where we come in, is being able to have that long-term picture to say, okay, yes, there is volatility in the US market that you can certainly profit from, but what's the long-term plan? There's long-term trends happening. I mean, we saw a quick devaluation, as you said, with the US dollar recently, but we've been looking at this for 30 years since we've been in business, more than 30 years. When I showed a chart, I was giving a presentation in Portugal. I showed a chart of inside the US, the devaluation of the US dollar in urban environments for the past 20 years. And it was like a water slide that no one wants to take, the steepest water slide at the water park. And there was visible gasps in the audience of people who spent their whole life in the States, who complain about inflation, and they still didn't realize the incredible impact it has on their wealth over time.
Yeah, I mean, the US is such a big country. I think about 60% of people in the US do not have a passport, and that's very different to a tiny country like Switzerland, right? I could go grocery shopping in Germany, where they have a different currency and a different economy, and that is one of the reasons why the US has such a strong home bias. I think most countries, most people in their own nation, they have some level of home bias, but in the US, that's even accelerated. And that also is relevant for like how portfolios are constructed, because the first step is foreign currencies, but then you also have a huge international markets of international stocks, of international corporate bonds that you might not be able to tap into from within the US because your financial advisor might not have like in-depth knowledge or experience in international markets. But then also you might not even be able to access international stock exchanges. So you have options like ETFs or funds, but those are then again denominated in US dollars, and you don't have the option of stock picking. And if you do want to pick an international stock, you're mostly stuck with ADRs, which are like international companies that are listed on the US exchange. And then again, you have the US dollar as the denominated currency. So I think just access to a vaster environment in terms of investment options is a huge point for a lot of investors as well, because it will give your total like wealth situation, your overall financial situation, a lot more stability if you are more diversified. The US market obviously has a huge percentage of the market capitalization of stock markets worldwide, but it's by far not 100%. You're missing out of, depending on where the value is of the US stock market, between a third and half of all investment opportunities in the world if you only focus on the US market. And I think that's something that a lot of people are also not aware of, and that other geographical regions, other economies, they don't move exactly the same as the US. So the US might do well and international markets might do a little less well, but also vice versa. If the US is struggling, international markets are most likely going to outperform. And that's something that we have seen quite drastically during the financial crisis 15 years ago. So I think that's another aspect that a lot of people are thinking about.
Yeah, and I think one more to kind of cap it off. You know, we've talked about the investments, the devaluation of the dollar, and finding those opportunities. But I think the other side is the confidentiality between your financial partner and the bank that you're in, the jurisdiction laws that exist in Switzerland and Liechtenstein that give this visibility from outside parties that essentially makes it go away. Yes, you have to report. Yes, you have your tax obligations. Absolutely. And you need to follow those. But data brokers and prying eyes,
Noisy family members.
They don't know it's there.
Yeah.
I still, to this day, I'm from Colorado. I won't name the bank, but I remember being back home and listening to a commercial of a bank saying, "You may have heard that we sold your data." And we don't confirm or deny it, but we promise we won't do it in the future. And I could not believe what I was hearing, and that exists, and that just doesn't exist in our world of private banking. Zero.
Yeah, absolutely. And I think having your wealth be less visible also adds a layer of asset protection to your wealth, because you're going to be much less likely to be a victim of a frivolous lawsuit. Yeah. And then you can also set up an offshore bank account in combination with a specific like asset protection structure, like an offshore trust, for example, or an offshore LLC. And that is really going to be as safe as it gets in terms of asset protection. And then talking about like safety and protection, I think also the Swiss financial jurisdiction, also the Liechtenstein financial jurisdiction, they have a lot to offer, especially during times of geopolitical turbulences. What we have seen the past few years, unfortunately, is there's more and more armed conflicts around the world again. And it can be very helpful to have your money in a safe, neutral jurisdiction where there is like a safe haven currency like the Swiss franc, where you have very boring politics with very like slow changes. You have fiscal responsibility, you have a low like debt to GDP ratio, and as you mentioned, you have all those like rules and regulations that really make it a highly safe jurisdiction to just keep a safe nest egg outside of your home country.
Absolutely.